Welcome back to our channel. Now we are discussing on one-person company. This is a unique business model introduced under Companies Act 2013. It has simplified the process for individuals to start a corporate entity with a limited liability without the burden of heavy compliance like larger companies. This video will give you a clear and updated roadmap on one-person company features, benefits, and mandatory compliance under Companies Act 2013. So what is an OPC? What is an OPC, one-person company? It is defined under Section 2, subsection 62 of Companies Act 2013. OPC means a company that has only one person as its member. It is ideal for individuals who want the advantages of private limited companies, such as a limited liability and separate legal entity, but with the simplified compliances. Now I'll explain you the key features of a one-person company. It has a single ownership, only one shareholder, one director. Limited liability, the owner's personal assets are protected from the company liability. And it has separate legal entity. The company can own property, enter contracts, and sue or be sued in its own name. Nominee requirement, because a nominee must be appointed at the incorporation to take over in case of death of the or incapacity of the member. Perpetual succession, the company continues irrespective of the changes in the ownership. Even person dies, no, the nominee will come. Lower compliance burden, 1%, OPC 1% company enjoys certain exemptions like no AGM, no annual general meeting requirement. What are the compliance required for one-person company? Director KYC, that is a mandatory DIR-3 KYC. Every person holding a DIN number, director identification number, must file KYC. This is annually once KYC. Suppose if any details you are changing already, updating any details, then you have to file full form DIR-3 KYC or just web KYC. OTP will come. That you have to enter. That is annually once. Last date is 30th September of every year. For this year, 30th September 2025 is the last day for KYC. Then annual filing of financial statement. Section 137 of Companies Act 2013. OPC must file the financial statement within 180 days from the end of the financial year. So for the financial year ending 31 March 2025, the due date is 27th September 2025 because 180 days. And filing is done through AOC form AOC form. And second one is annual return. That is MGT 7A. AGM is not applicable because section 96 exemption for one-person company. So OPC must file annual return in form MGT 7A. Due date is 60 days from the expiry of 6 months from the financial year end. 60 days. So for 24-25 financial year, 60 days from 27th September 2025. And statutory registers, OPC must maintain registers like register of members, register of directors, register of contracts and arrangements. These are the statutory mandatory registers to be maintained. And income tax compliances, yes, OPC must file income tax return every year. Due date 30th September 2025 if tax audit is applicable. And penalties for non-compliance, yes, 100 rupees per day penalty for each delayed filing AOC 4 or MGT 7. Higher penalties may apply in case of persistent defaults. And what are the restrictions for one-person company? A person can be a member of only one OPC. A person can be a member of only one OPC. OPC cannot carry out non-banking financial investment activities. So the conclusion is the one-person company is a game changer for solo entrepreneurs who want to benefits of limited liability and separate legal entity with a reduced compliance stress. But remember, timely compliance with ROC filings and director KYC and income tax return is crucial to avoid penalties. We have two channels, RR Corporates and RR Legal Talks. Please do subscribe and hit the bell icon so that you will not miss any of our latest updates. Thank you.